Hey there, welcome to the channel. I'm Karla Kyte and I'm a certified divorce lending professional, otherwise known as a CDLP, who ideally helps both parties in a divorce situation so that they may remain in homeownership. So today we're going to talk about getting back into the workforce during or after the divorce to make sure that what you are doing and the employment that you're seeking out, that you're taking the proper steps to make sure that you can utilize that in qualifying for a mortgage so that you may remain in homeownership. All right, let's dive in. So while I handle all types of residential financing, I am not your typical lender. My team and myself carry a special certification in divorce lending. We are not just helping you structure your loan, we're helping you structure your divorce. Let me repeat that. We are helping you structure your divorce so that it is within the lending guidelines. And that's what makes us different. I've helped over 1,000 families with their homeownership goals in the last 5 years, and about 20% of those have been divorce cases. I have to tell you that experience really matters, especially when you're dealing with your home and probably the largest asset that you have. So while I am not an advocate for divorce, I do want to help you to find the best possible outcome as you are going through this process. I also want to give the disclaimer that while I can talk about some legal concepts, I am not giving legal advice here, so please don't misunderstand that. So today we're going to talk about getting back into the workforce during or after the divorce to make sure that what you are doing and the employment that you're seeking out, that you're taking the proper steps to make sure that you can utilize that in qualifying for a mortgage so that you may remain in homeownership. I'll be posting a new video every Tuesday and Thursday, and we'll talk about everything that has to do with homeownership and divorce. I am most effective when I can talk to you early on in your divorce process, but even if you're partially through it or if you're already at the end, don't worry, I can still help. As much as I love doing these videos for you, I want to remind you that you're not a lender and you can't do these loans on your own. And I'm also not trying to teach you how to do a loan. I want to be able to be there to help you through this process. It takes a lender with a special certification in divorce to understand the uniqueness that every single divorce is very, very different, and they all need to be treated in that unique way. My team and I would love to help you with all of your lending needs, especially in the case of a divorce. Please reach out to this phone number that's popping up below, and we'd be happy to set up a consultation with you. All right, let's dive in. So really, to start out initially, I need to, of course, have a good phone call, a good consultation with you to really understand what your goals are. But the next step is to get an application in so that I can understand 100% what type of a loan we are trying to go after once the divorce is final, or even often during the divorce. It's important that I know this information so that I can connect with your attorney or your mediator and make sure that we're setting you up properly for success once this is all finalized. So let's talk about getting back out into the job world. I get a lot of phone calls from a lot of people asking questions. Is it okay if I take this job? What if I take this job? The hourly pay rate is this, etc. So let's talk about all the ins and outs involved here. Ideally, you'll be looking for a full-time W-2 job, especially if you have not worked for a while. So there are some loan programs that will allow you to qualify sometimes even before you start or as soon as you start a new position. It is really dependent on the profession and what that new job looks like. So if you're a professional, let's say that you're a doctor and you've taken off the last couple of years, maybe because you've had, babies, young children at home or whatever, then we could probably pretty easily, with a really good offer letter, we could probably even do a loan for you prior to you starting a new position, because we would be able to show previous history of you practicing as a doctor and now going back to work. Like I said, this just requires a really strong offer letter that lays out exactly what you're going to be paid and that has no contingencies in it. And then we could move forward with that rate of pay and qualify you typically under a conventional loan. Sometimes the loan will require that you've received one pay stub. So depending again on that loan type, we might have to wait until that one pay stub comes. A lot of this is really dependent again on how long was the job gap period, and how easily can we tie together your previous career to your new employment or your new career. Some loan types will actually require that you've been back on the job for at least 6 months. And like I said, if we know early on that that's the type of loan that we're going after, we might be able to do some things to put you into a different loan and come up with some different scenarios. But at least if we know that, then you know exactly what you are headed for. I know in a case that I worked on a few weeks ago, where I had to actually go testify in court, I was able to prevent the sale of her home for 6 months because she needed to be receiving some maintenance income before she could qualify for a loan. So that would be kind of the same thing. Maybe if you're getting back into the workforce, you might be able to make a case for something like that. So as long as we know this in the beginning, then we can tackle it and we can make sure that everything is in the separation agreement correctly so that you don't have to move twice. Again, ideally, you're looking at a full-time position that's W-2. But let's talk about that really quick because there are some other positions out there that are full-time and they are W-2. Like, let's take my position, for example. I'm a loan officer. I am W-2'd. I definitely work full-time. I work way more than 40 hours a week, but I am paid strictly on commission. And so if it was somebody in my case, they would have to actually be back to work for 2 years before they would really look at my income in terms of qualifying for a new mortgage. Now keep in mind, we do have other products, they're called non-QM products, where we could have some leeway there. Maybe we would only need 1 year, or I don't know, you might be able to get away with something like 6 months, but there are other things in that loan that would have to be there for something like that to be approved. Like maybe a very, very large down payment, or maybe I would have a lot of assets or something like that. But the other thing I want you to know is that even though those loans are available, they may not be very attractive because they often will come with a higher interest rate. So sometimes we will do those loans as a band-aid for people that are in this situation, but ideally we would rather not. We would like to talk to you early on and make sure that we have you set up properly, so when it's time for you to need a mortgage approval, you're in the best place possible to get the best rate and the best terms available in the market. I do want to caution you on any job that you're looking at that is self-employment, paid on a 1099, or commission-based. It's going to take you longer to qualify for a fully qualifying loan if those are the types of jobs that you are looking to get into. Again, some examples of that would be like myself, a lender. Another example would be recruiters. Like recruiters are paid highly on commission. Mechanics are paid in that same way. They're usually paid like per piece, like per vehicle that they work on. So these are all kind of the job types that are really tough for us to qualify without a long history behind us where we can pull a good average. So I'll say it again, like you've heard me say in a lot of these videos, really collaboration is the key here. It is so important that you get with me early on and that we are able to collaborate with your attorney, with your mediator, to make sure that that separation agreement is laid out correctly within underwriting guidelines. You need to make sure that your lender is in contact with your divorce team all the way through. And as a consumer, you need to make sure that what you're agreeing to in that separation agreement can actually be satisfied after the decree. I know many of you that are watching this have been contemplating divorce for several days, maybe several weeks or months, and you're coming up with all of these different scenarios. What if this, what if that? You're probably getting advice from family, friends, co-workers, God forbid, social media. Please do not take that advice to heart. Please seek out the experts that can help you with your unique situation. It is so important. I promise you, it is never too early to figure out how you can go about this in the proper way. Sometimes it can be too late because sometimes if we have to go back for a modification post-decree, the other party doesn't always agree to do that. What I hear from most of my clients is, oh my God, I wish I would have called you sooner. Like my realtor referred me to you 6 months ago and I have just lost sleep over this for the last 6 months. I feel so much better after I've talked to you. Like these are all the things that I hear literally on a weekly basis. And hey, if you don't know where to start, start with me. I have some amazing resources that can help you through this entire process. Again, it depends on your situation. And just as a reminder, I'm a licensed lender. I'd love to help you with all of your lending needs, especially in the case of divorce. So please don't hesitate. Reach out to this phone number that's popping up. You can call or text and we'll get a consultation set up as soon as possible. I look forward to sharing with you again real soon.